It's indeed an honor that we are joined now by an accomplished career spanning decades in banking and financial services industry leader. He's somebody who brings with him a wealth of experience in corporate banking, structured finance, credit strategy, and large institutional relationships. Over the year, he has built a reputation for combining sharp financial acumen with strategic foresight. At Yes Bank, he plays a pivotal leadership role in strengthening nationwide client partnerships, driving sustainable growth, and aligning capital with opportunity across sectors. His work reflects a deep understanding of India's evolving economic landscape, from traditional industries to emerging enterprises truly shaping the future. Known for his pragmatic leadership, he's somebody who has the strong governance focus and is all about enabling transformation, supporting innovation, and acting as a catalyst in India's journey towards becoming a global economic powerhouse. As India advances towards its long-term development vision, leaders like him are redefining how financial institutions contribute to resilience, inclusion, and sustainable growth. Ladies and gentlemen, please join me in extending a very warm welcome to the country head, Yes Bank, none other than Ajay Ranjan.
No problem. And thank you for the kind words, and especially difficult to do a session after big heavyweights have done a session. So I will try to do my best to keep everyone engaged. Of course, the topic is equally interesting. I'm asked to talk about RBI's initiative for cross-border payment, settlement, and digital infrastructure or integration. And of course, needless to say, when you talk about the regulator and RBI, you need to be very, very clear in terms of what you're talking, and hence I will go with a created script which I have tried to assimilate all the points which I wanted to cover. So the topic is extremely relevant. And to be fair, I think as a regulator, the Reserve Bank of India has been super pragmatic, super progressive in terms of creating various initiatives, various enablers to position India as a global trade superpower, to position India as a global player in terms of cross-border payments or remittances, and that's the point that we will try to cover today. So India today is no longer a simple remittance recipient or a minor trading partner. If you look at it, India today comes at a focal point of what I call as a digital Silk Road. So in the old times, you will recollect, we used to call India Sone ki Chidiya, and it was because India was at the heart of global trade. Almost 25% of global trade used to go through India. I'm sure, all of you are aware of that. Which is now down to, I think, 2% or 3%. What the government is trying to do is strategically try to move this number upwards. And what we will try to cover today is how the Reserve Bank of India, working in conjunction with, the government of India, has tried to create enablers and initiatives, which will work towards that. So India today, I would call it as a strategic hub where global financial flows converge, digitize, and redistribute. So when you look at remittances, India is home to almost $150 billion of remittances comes to India annually. This is the largest flow of remittances coming into any country globally. The combined value of remittances going into Mexico, China, Philippines is lower than what comes into India. And the rest of the three are very major remittance corridor. So that gives you a sense of, you know, the value of what India brings to the table purely in terms of cross-border flows. And I'm not even talking about export-import flows and the trade flows, and this is pure remittance, P2P remittances, you know, which move, right? Now, this is not an accident of demographic or just because Indian diaspora is a lot outside. It is purely a deliberate outcome of institutional architecture which is designed by the Reserve Bank of India. And, you know, this is what will help India become a further major remittance power. By 2020, I think it is expected that Global South will contribute almost $700 billion, and India is expected to contribute a major part of this remittance by then. So what I will try to cover today, while, you know, RBI has taken a lot of initiatives, but I have tried to, you know, bucket it into 3-4 aspects, covering between retail and wholesale, and tried to create it as a single integrated infrastructure stack, where each layer is enabling the other. So I've tried to, you know, cover it there, cover it in among that model. So among all the other initiatives, 4 broad initiatives is what I will cover today. One is the CBDC and the UPI corridor. So there was a question on UPI. I think that gentleman has gone, but you know, that is one part of the layer that I will try to cover. The second is a very nuanced and very upcoming trend, which is called PACB, Payment Aggregator Cross Border. In my view, this is going to be the game changer over the next few years. Will really position India, you know, in a very serious manner. The third is FX retail democratization, and this is again very, very critical, tangible value, and I will talk about some of those numbers. And last but not the least is, you know, the government's initiative of trying to position India as an export hub, right? All the Make in India and Atmanirbhar Bharat initiatives are all trying to improve the export volumes out of India. So what steps have been taken by the RBI, we'll try to cover there. So that's broadly, you know, the 4 themes that I'll try to cover. The first theme I'll cover is my personal favorite, CBDC, the combination of CBDC and UPI as a settlement substrate. So here we've seen globally many central banks experimenting with digital currencies in their respective silos. What India is doing differently is it is architecting a cross-border settlement highway where digital rupee is not only managing the domestic payments but also becoming an international payment rail. This is also reinforced by UPI as the last mile connectivity. So CBDC plus UPI will eventually, you know, play a complementary role in getting this done. So the retail e-rupee pilot today, you know, from I think within 3 years of its launch, almost 1,000 odd crores of currency under circulation. Of course, you know, it's largely domestic, and wholesale CBDC trials around government securities, etc., being done with around 17 odd banks. That's broadly where CBDC today, you know, is being tested, but it is going beyond domestic into international territories as well. If you noticed, in January 26, Reserve Bank of India recommended to, you know, create a BRICS level CBDC interlinkage, and this is very, very significant and strategic, and I will tell you why. You know, and it actually represents that India is really thinking very strategic at a geopolitical level, right? So the rationale is also very compelling. Now, if I give you numbers on BRICS, right? So only the BRICS plus nations constitute to 46% of global population, 36% of GDP, and $5.3 trillion in intra-block trade. That means these countries within themselves are doing 5.3 trillion of trade. But all of this trade, 80% of this trade is settled in US dollar. Abhi kya lena dena hai usme? You know, they could have settled within their currencies, but they're all settling in US dollar, right? So what is happening? They are subject to sanction risk and, you know, other issues which are, SWIFT. Ravi was here, when Russian trade transaction happened, SWIFT also got embroiled there, right? Why was RBI pushing for independent system other than SWIFT? Is purely because of the fact that SWIFT was forced to implement, a sanction which was done by the behest of some other country, which they should have not, right? They're supposed to be apolitical. But anyway, it is what it is, right? So a CBDC linked settlement, what it does is it enables 4 distinct capabilities. One, direct central bank to central bank liquidity provision, no commercial intermediaries, no banks in between. Second, real-time FX conversion at transparent reference rates becomes possible. Third, programmable compliance with sanction screening can be implemented. And the fourth one, the trade documentation can be embedded on smart contracts. So payments and documentation, everything gets combined. So that's really, where the CBDC cross-border, is getting worked on. And but having said which, it's not only CBDC. And to the point that the gentleman was making, UPI, whether and he was asking whether it is myth or reality. But UPI also, from an international perspective, today has grown almost 20x year on year to almost 8 lakh transactions in FY25. And in the first 4 months itself, crossed around 600,000 transactions. So when we compare to billions of transactions in India, these numbers look very small. But then the fact is it's a growing number. More and more countries are getting embedded, and that's how UPI will also grow. So as of Feb 26, UPI International, which is NIPL that he was speaking about, operates in 25 plus countries. Merchant acceptance for Indian travelers. So when I am going outside, I can use UPI in UAE, Singapore, Bhutan, Nepal, Mauritius, Sri Lanka, France, Oman, Qatar, Russia, Malaysia, and Japan is going to go live. So, these are the countries where UPI usage can happen. Similarly, a remittance integration via UPI is happening reverse. So Singapore to India via Pay Now is also getting done. And most importantly, what India is also doing, and this was part of the G20 strategy, India also is exporting its infrastructure, the DPI which got created, also to other countries. So it has 2 objectives, right? One, it helps other countries to expedite their digital journey, because what is already done, you don't need to recreate it. You can simply, buy it and take it. And more importantly, when at a global geopolitical level, when you look at maybe a decade ahead, right? When all systems are similar, the infrastructure is similar, the intertwining of all of those systems become much more easier, right? So it has a lot of strategic objectives in terms of infrastructure export, overseas to other countries, right? So already countries like Peru, Namibia, Trinidad, Tobago, all of them are already looking at taking your UPI infrastructure there, right? So that's, kind of the combination of CBDC and UPI. And this is where the next layer, the first layer I spoke about, CBDC, UPI. The next layer is what I alluded to, which is the payment aggregator cross-border. So you would also realize that India is now also one of the largest consumer of online digital trade. So we used to always, India se export hota tha, software exports hota tha, right? So a lot of the coders, etc., from India, they would work to support the App Store or Play Store and, various other things. So these are payments which come into India. Now, trade also has started becoming big. So a lot of Indians, so when you go to Amazon today, right, you can also buy goods which are sold by Amazon US from your Amazon.in. Right? This has got, and you can pay using your domestic cards or domestic account. All of this got possible because of a very progressive thought process of Reserve Bank of India, which created a regulation around payment aggregator cross-border. Now, this is where I really give, kudos to the Reserve Bank of India. Most regulators would treat online trade, cross-border payments as an unregulated fintech barrier frontier, right? And either be discomforted with that or maybe, be ban it also if required. But the Reserve Bank of India actually created a regulatory clarity and brought this into a competitive advantage. So today, if you look at the RBI PACV framework, right, it creates a very governable corridor, for international money movement for trade cross-border transaction. Now, this is where, you have really fostered innovation within a controlled framework. So, full credit to Reserve Bank of India to create such innovation, right? As of Feb 26, 10 such licenses have been issued and $8.2 billion of cross-border transactions have been processed. Just look at the scale. And this is only the start, right? These volumes are now going to increase. So the more players like an Airbnb, a Booking.com, so all of these now, you will technically be able to book from India and pay from your domestic card and no longer need to go through the agent route and all of that. Everything will go through a PACV framework. So this is the beauty of what the Reserve Bank of India has brought in with very good pragmatic regulations to create these volumes, right? I'll give you an example. So an Indian exporter in Surat today receives payment from his buyer in Sao Paulo, Brazil, for example, via a PACB platform with real-time EDPMS reporting. EDPMS reporting is basically a regulatory reporting where you report all your export transactions. Similarly, on the import side, it's called import IDPMS, so for import reporting. And within a 48-hour settlement, so the settlement timeline is also defined in the PACB guidelines. So within 48 hours, they get the INR settlement at a transparent FX rate in your account. So this whole process, which earlier would probably take few days with not too much of transparency, regulatory pending being shown, etc., has now been fully digitized, fully straight through, and fully FEMA compliant, right? So that's, the beauty of how, the PACB has been evolved. However, having said which, and this is how I'm going into the layer 3 now, while the payments have been sorted out or, is being sorted out, what remains pending is the price discovery for FX conversion. And this is where exporters and importers lose a significant amount of margin, on their transactions or on their business, because a lot of money goes on the FX volumes. As a banker, I shouldn't be saying it, it is a significant revenue stream for us. But, when I'm standing here, I'm talking more from a country perspective, and that's really where, the lens which RBI is also, looking at, right? So so this is where the FX retail integration, which RBI has launched, becomes very, very transformative. So the layer 3 is where RBI's FX retail platform has got integrated with RBI's initiative called Bharat Connect, where they created the interoperability of net banking platforms in Q4 24. So in in Q4 24, and it got operationalized in FY 25. So this creates a governed, visible, real-time FX market, which is available for retail users. So no longer, will the customer be dependent on banks giving the FX rate. The FX rate will actually can be given from a central platform, which is managed by CCIL, and banks will have to bid for that conversion. So the 2.8% traditional bank margin was processed at 0.18%. And the volume by December 25, the platform processed 4.8 billion US dollars retail MSME flows. Can you imagine the tangible value creation which it has created for small MSME players or small retail consumers like you and me? That's the strategic value of this platform, right? With India's merchandise trade today touching $1.2 trillion, And with all these initiatives of Make in India and Atmanirbhar Bharat, etc., and focus on exports, which I will cover next, the amount of cross-border trade is only going to go up significantly. So with initiatives like this, you can imagine the tangible P&L impact which will get created for Indian corporates or Indian retail consumers with initiatives such as this, right? The last layer which I want to talk about is export enablement, right? And exports is MSME and exports is the government's and regulators' single largest focus in terms of trade enablement, right? So FX, they have created some value adds for digital trade or import export. They created the PACB. The last what they did was the exports in India traditionally has been a lot of friction, lot of manual intervention, lot of non-transparent processes, lot of FEMA kind of regulations, lot of those things were there. What RBI did was it issued 14 FEMA amendments which shifted from prior approval. So करने से पहले approval लेने के बाद की जगह post facto approval कर दिया, right? So the whole process got simplified. It permitted 100% EFC retention. So you are an importer who also has exporter who also has imports. You will not want to convert into rupee and then again convert into dollar, right? So you would want to retain into EFC. So they permitted 100% EFC retention. In GIFT City, they permitted, instead of 1 month, which is locally you can keep up to 1 month without conversion, in GIFT City they permitted आप 3 महीने तक इसको रख लो. So if your import transaction is say 3 months hence, then instead of converting a dollar only kept going up, right? So you may prefer to keep it in dollar and use that money to make payment in dollars. So those kind of enablers, were gotten. A lot of the regulatory pendencies were got created. आपने छोटे-छोटे export कर दिए, उसका proof आपने bank को नहीं दिया. So a lot of those pendings were showing against the exporters. So they were getting penalties, getting charged. RBI brought in regulations, to say genuine cases है, write off कर दिया, आपका shipping bill गुम गया. So a lot of these enablers were created for these exporters that banks can condone all of these and release the exporter, right? So some of these initiatives were brought in by Reserve Bank of India, and today, by December 25, almost 82% shipments achieve straight through processing with zero exporter intervention. So that's, in terms of tangible value benefits, what got created. In terms of export finance also, what RBI did in June 25 is they reduced the pre-shipment finance approval from 15 days to 48 hours and expanded refinancing from 6.2 to 8.9 trillion INR, right? 6 lakh crore se 8 lakh crore. This actually supported almost 3.5 lakh exporters, which is, in my view, was a very significant number. Similarly, DGFT, the Director General Foreign Trade Advance Authorization Scheme, they integrated with RBI's payment tracking, and this cut the export obligation reconciliation. So I told you about the EDPMS platform. This reconciliation reduced from almost 6 to 9 months to 20 odd days. So all of this meant that today an exporter who has to get duty benefits earlier had to wait for so many months to get those benefits. Now, instead of 6-9 mahina benefit nahi milne ki jagah, within the same month, they were able to get those benefits, right? So this, again, almost 18,000 odd crores was disbursed to 2 lakh odd exporters in FY 24-25 with 99.2% accuracy. So again, these are tangible value adds which, which got created. So that was on the export side. So to summarize, what I will say is, from a remittance dominance, so India is, as I told you, the largest remittance beneficiary. From remittance dominance to CBDC corridors, the PACB regulations to the FX transparency, to the export compliance automation, all of these initiatives, what India has done, we have constructed something which is unprecedented, a digital native sovereignty which is preserving international payment ecosystems, which is operating at commercial speed and regulatory oversight, right? Which is again unprecedented in global parlance. If you look at it, that's what India has achieved. So over the 15 years, if you look at multiple innovations that has been done, Jan Dhan in 2014, Aadhaar integration 2016, UPI launch in 2016, FEMA liberalization, which has been an ongoing process over the last 15 odd years, the PACB framework, the cross-border remittance framework in 2020, CBDC pilots in 22, FX retail in 23. All of these are strategic steps which have been taken from RBI over a period of time, right? So this is what is going to really create and propel India as a financial powerhouse from a cross-border perspective. This infrastructure which India has created and which India is exporting, right? Which I have mentioned, the DPI export which India is doing. Now all of this infra is already created. Now, what India chooses to do with this infra, whether we create a infrastructure, a network which is using Indian infrastructure or not, that's a geopolitical choice, that's a policy choice. But infra is here, you can use it when you want. The countries who need it, it is readily available for them to to use. So that's what we have done. We have built interoperable rails, we have set the technical standards, we have created institutional frameworks. It is tested at India's scale. So India, level of volumes pay, it has been tested. It is now a policy change whether, when you want to use it. And this is how we'll define when infrastructure will become influence from an India perspective. So that's, broadly what I would like to highlight. Of course, I'm open to questions. If there are anything that you would like me to dwell more upon, more than happy to do that.
Ajay sir, first of all, it was very tremendous, very deep dive analysis of the entire export financing and everything. But I have a very particular question regarding the FTA that India have signed recently with the European Union and United States of India, right? There has been a lot of debate. I'm not going into the political kind of discussion here. But being a straightforward question, now, given the importance of the trade deal with European Union and also United States of India, are we going to see an upswing of Indian rupees against the position that against the dollar, or RBI, what we are seeing, the de-dollarization approach by other countries, specifically the BRICS country, are we seeing any kind of changes going forward here in terms of the trade settlement being done on Indian rupees on a much larger volume and any kind of changes here?
So see, that is what I mentioned in my note as well, right? Ki what are the strategic pillars which are required? One, you are today a major trading partner for all the countries, right? Yeah. Where you wanted to double down more is where you have signed FTAs also. So EU, Middle East, you wanted to do more. आपने Middle East के साथ में FTA किया है. Europe आपका एक major partner है. दोनों आप import भी करते हो, export भी करते हो. You had to create an alternate as well. वहाँ पे आपने build किया है. US is the world's largest trade partner. You cannot ignore. You have further strengthened, your trade with them. So what India has done very well is that they have built sufficient corridors so that we are not dependent on one corridor, we cannot be held ransom in one corridor, but we are building equally powerful corridors everywhere. So that is taking care of the trade part. Yeah. In parallel, अब आप ट्रेड के FTAs तो बना दिए हैं आपने, बट आप जब तक मैन्युफैक्चर नहीं करोगे तब तक आप ट्रेड कैसे करोगे, right? So both services, of course, we've been good, those are value added services. So, we have always done well, both in terms of putting people as well as now value added services, which is the GCCs. And you see that India is, building more and more GCCs. So the software part of it is getting taken care of. The manufacturing part through initiatives such as Atmanirbhar Bharat, PLI, Make in India, all of those are making sure that the infrastructure, manufacturing infrastructure in India is also bolstered for you to do more, sell more overseas. तो ये तो आपका ट्रेडिशनल मॉडल आपने कर लिया. अब इसका जो सेटलमेंट है, पेमेंट सेटलमेंट है, उस पे इंफ्रास्ट्रक्चर रेल्स हमने बना दिए हैं. सो आई स्पोक अबाउट CBDC, आई स्पोक अबाउट UPI, राइट? ऑल ऑफ दीज आर infrastructure rails which India has created. The regulatory to regulatory dialogue in terms of कि हम ये कर सकते हैं has been done with few countries, is being happening with few countries. Now will India push the pedal and work with and convince those countries, or the other way around, to move from X currency to rupees, is a policy level decision or a geopolitical solution point, right? I am not equipped to answer that. The government of India is has supposed to take that decision. If they take it, then of course you will see that more and more trade happens in rupee. If not, they may take a policy level decision saying कि settlement, हम exports बढ़ाएंगे, but settlement say for example डॉलर में करेंगे. That's a strategic government call, right? More important is your volumes have to increase. Yeah. Which is where the government of India and the regulator are pushing maximum, to help that. So exporters को SOPs दे रहे हैं, मेक इन इंडिया बना रहे हैं, PLI दे रहे हैं. सो वो सब आपका जो बेस है, बेस को बढ़ा रहे हैं.
So my second question is related to the deep tech or manufacturing debate in India. Currently, if we compare ourselves to the southeastern countries or many other, even the European countries also, our manufacturing concentration is still lagging around 12 to 13%, which is way below the standard. Despite being there's a push from the government in the recent budget also. 10,000 crores of this deep tech fund has been created. But what we have seen in the startup or in terms of the SMEs also, the R&D aspect of it in lagging in India, right? Even so, not creating an enough environment in terms of the deep tech or R&D environment. This is what I think the hampering the ecosystem to certain extent. So, being since you are at that position to see how the ecosystem should evolve around it. So, do you think the recent what we have seen the budget in terms of the allocation of funds to the deep tech or kind of the diverting the fund to SIDBI and making a fund of funds of another 90,000 crores. But of late the deep tech investment has not been that aggressive because it's a patient capital and more private equity or maybe the family offices where the liquidity is lying around. So how should we approach from both the government and also from the industry, like or from the fund side also?
So answer तो आप ही ने दे दिया है कि budget में they have pushed. So two things, right? One, it has been identified that it is required. उसमें तो कोई doubt नहीं है, which is why the budget put so much of emphasis on it. It is not that nothing is happening. We are doing a lot of work, including if you look at this work, some of the GCCs are also doing. Startups infra तो मैं अलग से बोल रहा हूँ, but GCCs at least for their respective companies, so they are doing deep analytical stuff here, and they are selling for their own companies, right? So a lot of work is already happening. Of course, the government has identified this as an area where we want to double down. So we want to go into more deep tech. You rightly said it requires patience, capital. VCs will want to see quicker returns into this, which is not going to happen, right? Yes. So which is why the government has stepped in and said कि SIDBI के through करेंगे, and government support will be there. So I think till the time it becomes excitable for private credit, the government will step in and they will do it. Of course, it will require founder mindset also, founder also a quick exit wale founder nahi chahiye, right? We need people who are really deeply into it and are willing to play the long game. So it is going to be a more strategic and more patience game. But in my view, the government has understood that this is much required for the country to do, and this is going to be our USP differentiator when we compare to some of the other countries who we are kind of comparing ourselves with, right? So it will take some time, but in my view, it is something which will happen over the next few years, or definitely in this decade. You will see India as a major power in deep tech.
My la-
Aadhaar, no, where they have identified 1 lakh crores of investments on science and technology, R&D, which includes deep tech. So it's already there.
Yeah, which I said, it is going to take time. At least from a roadmap perspective, we are on the right track.
My final question is the impact of GIFT cities on Indian economy.
Sorry?
The impact of GIFT cities on Indian economy.
GIFT City, वो तो पूरा topic है यार.
No, we'll take it offline in case that's okay. But yeah, so we just request. Apologies, I had to cut in because he's been really patient with his time. So I think we have to respect his presence as well. Let's give him a big round of applause, please.
Only out of love and affection for our N-Cube collaboration and Narendra. So, and this, with the facts and figures, he is giving all the things. And of course, government, will collect all the feedback and all. And what is appropriate at the appropriate time, government will do. Government is committed to Vikasit Bharat. So that is Connect Future Leaders. Thank you, Ajay Raj. Thank you, Dinesh. Yeah.
Thank you so much. And let that applause flow in, everyone. What a fantastic closing. This has been to the day one of Connect Leaders event right here by the N-Cube Collaborations, encouraging Viksit Bharat 2047. Thank you so much once again to our speaker for joining in, and thank you, Dr. Narendra.
So one word, whoever is available here, how was today's overall curated program? If you are happy, please raise your hands. Not for me, so glad. Because to do this type of program, now of course we are having tomorrow also, so that is where the next question is, I can trust that all of you will be available here tomorrow. Yes, so it is to get around 100 plus speakers and ensure that, because another thing, we could not get normally Friday, Saturday, so that you would have somewhere they can take the break. But we could get the hotel also only on Monday and Tuesday. Now I am myself is really thrilled that where there is a quality, where there is a content, where there is a wisdom, and where there are people of accomplishment coming and giving, and this type of interaction as well as their knowledge, then we will have a continuity of our people or of you are supporting. And your supporting and your attendance and your involvement, that makes us to further provide. See, this program was always 1 day program. Next it became 2 day. Similarly, tomorrow we are started with the 2023 onwards, we are giving leadership award. So the leadership award may be started with 10, and I am not giving the tomorrow's award number, but it went to 28, it went to 32. So that means there are lot number of accomplishers and achievers in different field. Take for example, it is not a one field only, different field. So tomorrow, apart from morning 9 o'clock, we are starting. And one more thing is, our just retired Deputy Governor, Mr. Rajeshwar Rao, he will be the chief guest tomorrow. And you would see that right from the inauguration, there are very, best leaders are there. And in the evening, we are having the 7 o'clock leadership award. And that will be also attended by Rajeshwar Rao. And it will be attended by Dr. Srikant Panigrahani, who was the chief guest today, and Mr. Sitaram Kunte, who was the ex-chief secretary from Maharashtra, and today Institute of Directors, he is the local, chairman. So I request not only you, whoever you can reach out, who has the interest in this type of, discussion and getting ourselves ready for Vikasit Bharat, please do come. But the only thing is tomorrow also, because today inauguration started at 9, but sometime seniors we have to give time. So similarly, of course, but tomorrow we will definitely maintaining the time, and we have until the 6:30 or 7, we have the sessions followed by gala, award function and dinner. So breakfast, lunch, dinner. Please do come, and we'll thank on behalf of myself, thank on behalf of the sponsors, thank on behalf of our channel partners, particularly Sandeep Pariwal, who is the Managing Director and CEO of our SBI Associates, who just completed the master class down. And there also knowledge was there on the bond market, on the infrastructure financing, all that. So our idea is as much utilize and opportunity to do that type of program. Thank you very much. Be here tomorrow. Correct, no? You are now joining the tea. Yes, yes, please. And also give a big clap. Tomorrow both है. अभी हमारा भावना भाटिया. आज उनका tightness of time थोड़ा मेरे से गलत हो गया. चलो, all the best. Come.
So, ladies and gentlemen, I don't think I have to say much after Dr. Narendra. He's clearly summarized what lies ahead also, of course, for you, but also what has happened today. Once again, we'd really like to thank all of you, but as he assures that the conversations will continue, we've got the fresh list of speakers joining, and of course the chief guest of today is also joining us tomorrow. He was very kind with his time, and he did confirm on the same that he'll be there throughout whenever he's available, but definitely in the awards for sure. So on that note, do reach out to us on LinkedIn at Ncube Collaborations, and let's continue with a collaborative spirit tomorrow with the day 2. We hope to see you right at 8:30. Do join us for an early breakfast so that we can begin at 9 a.m. Indian Standard Time, not stretchable. So fingers crossed, joining you tomorrow for the day 2. And this is me, Bhavna Bhatia, on behalf of Ncube Collaboration, signing off for day 1. We request you to please join us for a cup of coffee and tea outside. Thank you so much.